Have you ever felt like you can't afford to retire because you don't have enough money in your retirement account to last you for the rest of your life? Or you might be afraid you'll run out of money during retirement and you'll have to go back to work? Well, nobody wants to go back to work when they're 75 or 85 years old, nor should you have to. Maybe you're not ready to retire yet, but you're sick and tired of working your 9-to-5 job, or you hate your boss, or that commute, or all the above. Well, maybe it's your income, or should I say the lack of income, and you're not getting paid what you're worth or capable of earning. And here's the real joke, your retirement account. What is your job doing to help you with that? If you feel like you're currently facing any of these challenges, you're not alone. Because these are the 3 biggest challenges facing middle class today. Hi, I'm Andrew Williams, Professor Cashflow here, and I'm here to tell you that there's a better way. And you don't have to settle for a life of mediocrity. You don't have to keep working the 9-to-5 job that doesn't give you the time freedom or the cash flow you deserve to enjoy life. You should be able to take vacations whenever you want, so you can spend time with whoever you want, when you want. You don't need to be stuck in the retirement trap anymore either. The financial TV gurus will tell you to save a percentage of your paycheck every week until you get to $1 million. Well, how's that working out for you so far? Do you have extra money from your check to put into your savings account? If you're like the average American, the answer is no. $1 million is what they tell you have to have in your bank account for retirement. But what they don't tell you is by the time you get to retirement, the $1 million is only worth $350,000 due to inflation. There's a lot of problems with the retirement plan for America. The other big problem is they tell you to put your money in the stock market. The stock market is at an all-time high right now, and it's bound for a correction. The stock market is cyclical, and it always has swings up and down. It's the natural cycle of stocks, real estate, and the economy. It can't keep going up forever. At some point, it will come down. So what happens if you have all your money or your retirement account in the stock market and the market corrects like it did in the dot-com crash of 2000 and the subprime meltdown of 2007? Well, I'll tell you, you'll lose half of all your net worth very quickly and you may never get it back. By the way, a 50% reduction requires a 200% correction just to get back to even. So when something like this happens to you after you spent the better part of your life saving for retirement, it's devastating. And this is why the stock market is a very risky place to have all your retirement funds. And this is why it is impossible to get wealthy by saving money. Enough doom and gloom. I want to show you a powerful formula that I have created that will not only grow your retirement account for you, it's also the safest place for you to keep and grow your retirement assets. The best part of it is, it's a passive strategy that gives you the freedom to do the things you enjoy doing. You can use your 401k, your IRA, any savings, or any other money that isn't earning double-digit returns in a safe asset and protect it from the inevitable market crash. This simple strategy will allow you to retire whenever you want and feel 100% secure that you'll have the income to not only cover your living expenses, but to support your pre-retirement lifestyle. Not just retire, but retire in style. I will show you the formula to not only grow the value of your retirement account and the overall net worth, but to create a stream of passive income I like to call mailbox money. In fact, my powerful formula can grow your retirement account tax-free or tax-deferred depending on your situation, and I'll show you how to do this in detail on one of my next free videos. By the way, I'm not selling anything in these videos. These are purely educational because I want to help you escape the rat race. You know the definition of insanity? It's when you keep doing the same thing over and over again, but expect a different result. You see, I was once in the rat race, and I know what it feels like to be chained to a desk 50+ hours a week with no relief and no solution to get out. I'd like to share with you my powerful formula. I created this and used it to break free from the rat race 17 years ago. All you have to do is have the desire to retire with style and take action. Now, what I'm about to share with you is not a get-rich-quick scheme. It's a strategy you can use to generate lifelong passive income. You don't need cash, credit, experience of any kind, or any special licenses to do what I'm going to show you how to do. I created this strategy for myself when I wanted to break free from the rat race, and I wanted to get into real estate, but I didn't want to deal with all the work involved with residential flipping, because residential flipping is very active work, and it's just another version of the rat race. It can take a long time to do one deal, and if you do choose to fix it up and flip it, the money at the end of the deal is never what you expected. Plus, it's very active work, so you're actually creating another job for yourself, which was not appealing to me at all. Because residential flipping is so competitive and the deals are so very hard to find, you're actually limiting your income potential because you can't scale this business model. Now, don't get me wrong, you can make money fixing and flipping houses, but I honestly didn't want to work that hard. So the biggest downside to residential flipping for me was the income stops when you stop doing deals. So it's the same problem for you. You see, I knew I didn't want to work that hard, and I didn't want to work forever. This is why I wanted out of my 9-to-5 job, and I wanted something that would generate passive income so I could take vacations with my family and have the freedom to do what I want when I want. So here's my story. Back in 1995, I was working my 9-to-5 job as an underwriter at a bank. A loan came across my desk. This particular borrower had 20 pages on his Schedule E. And for those of you who don't know, a Schedule E has 3 properties on each page. So 20 pages means 60 plus properties. The income that they were earning was coming from all of these properties, and it was all passive. It's all coming from rental properties. They didn't have other income. They were traveling the country in their motorhome, enjoying life, and didn't matter where they were, those checks kept hitting their bank account. So this is when the light bulb went off for me. I wanted to enjoy financial freedom and have passive income like my customers had. So I set a goal to buy 1 rental property per year for 20 years. Well, guess what? 3 years later, it's now 1998, I still hadn't bought a property yet because I didn't know how. I was still working for the bank. Now I was in the mortgage department as a loan officer. Well, another client came across my desk. It was a father and son team. Their names were Bob and Robert. I always refer to them as the Bobs. Anyway, they came to me to do some financing on a property they were buying, and over the course of 9 or 10 loans, I realized all the properties they were buying were fourplexes. I realized the deals they had put together on these loans were structured with little or no money down, and they even got cash back at the closing on some of the properties. That's right, they got paid to buy these properties. This really got me excited about buying my own real estate again, and I had remembered that I set a goal to buy 1 property a year for 20 years. So I discussed this with the Bobs, and they said to me, why would you want to have 20 units all over town when you can have 4 units in the same building? And this way you can save on management fees, and if 1 unit goes vacant, you still have positive cash flow from the other units. So when your single-family house goes vacant, now you're cash flow negative because you have no income, yet you still have to pay the mortgage and the expenses. So I thought this advice was very smart, and I quickly changed my goal from buying houses to buying multi-unit properties. But I still had a lot of questions, like, how do you structure these deals? How do you get in with no money or very little money down, or even get cash back at the closing? And how do you find these types of deals? And how do you manage them and keep them filled with tenants once you own them? Well, fortunately for me, the Bobs agreed to be my mentor through the first few deals, and I was able to pick up an 8-unit complex immediately for no money down. I had instant equity the day I bought it and positive cash flow that I was looking for. I was so excited. I had found the solution I was looking for, and that was 17 years ago. Here's what that 8-unit deal looked like. So I bought it for $237,500 with none of my own money down. It was generating $2,500 per month in rental income, which was 20% below market rents. So this meant I could increase the rents and immediately increase the value of the property by $82,500 because unlike single-family houses, multi-unit properties are valued by the income they produce, not by comps. This is another huge plus for multi-unit properties. Let's fast track to today, and I've bought and sold over 5,600 units, including small multifamily buildings, larger multifamily unit buildings, up to 300 units even. I've bought a 125-unit hotel and several small office buildings, and I will never forget, it all started with that one little 8-unit apartment building. So I've taken all of my experience from the past 17 years, buying and selling multi-unit properties, analyzed each and every deal, and created a system of how I did it, how I did all these deals with little or no money out of my pocket, and how I scaled up acquisitions quickly to grow a massive cash flow stream. This simple, yet very powerful strategy is called the passive cash flow formula. Here's a few of the reasons why I love the passive cash flow formula and why you should love it too. After you acquire multi-unit properties, you can get passive cash flow forever because unlike residential, all of the effort in setting up the cash flow stream is front-end loaded. You do the deal up front and it continues to pay you forever or until you sell or exchange the property maybe into something bigger. The IRS has in its tax code the ability for you to trade up to bigger buildings tax-free. This is a huge advantage over residential real estate. You can get in for little or no money down and even get cash back in some of the closings. I have a 25 specific technique formula that I use to get into deals for very little or no money down, and the passive cash flow formula is very flexible. You can start with 2 to 4 unit properties and move up to 20 to 100 unit properties, or you can go big from the beginning, whatever your appetite is. One of the best reasons is it's not active work. If you decide you bought enough units and you want to retire, the income stream will continue for as long as you like. Unlike residential, the properties are surprisingly easy to find. They're everywhere when you know how to find them and where to look. There is much less competition than in residential real estate. The risk factor is much less than residential because one vacancy doesn't mean you lose 100% of your rental income. Unlike the stock market, you have 100% control over your multi-unit properties. You can increase its value by fixing it up or raising the rents. And with the stock market, you're in at the mercy of the rest of the world. And with the hands-free approach the passive cash flow formula provides, the advantages are much greater than stocks and mutual funds. Your financial advisor won't tell you this because they don't make any commissions when they stop managing your money. But you can now buy multi-unit properties with the funds you have in your IRA or 401k. And I can show you how to do this in a future video if you're interested. In fact, use the comment section below and let me know what you think of this video and ask for the special video on investing with your retirement account. It's much smarter for you to manage your own money anyway. Most financial advisors are primarily concerned about one thing, and that's their commissions. I invite you to learn more about the passive cash flow formula, and I'm going to be making a few more videos. So post in the comment section below any questions you have or anything you'd like me to cover in one of my next videos. And if you've learned anything or received some benefit out of this video, please give it a thumbs up and share it, because middle-class America needs to know the information that has been secretly hidden from them by the financial advisors and the media of the world. I'm Andrew Williams, Professor Cashflow, and I'll see you on the next video. Now go like and comment and share below.